In 5 minutes, you will understand the basics of mortgages. Welcome back to Explaining Difficult Stuff. If you are about to enter the housing market, you will find this short video helpful. The relationship between the economy, the Federal Reserve and mortgage rates is complex. Still, we will explain it using simple terms. We promise you don't have to be a financier to follow. In this video, we will explain the role of the Federal Reserve, what a mortgage is and how they work. So, let's dive in. Since the beginning of 2022, we have heard a lot about the economy and inflation. Situated squarely in the middle of all this is the Federal Reserve. The actions they take, or might take, are heavily scrutinized. Traditionally, the Fed cuts interest rates to boost a troubled economy, and raises them when it becomes overheated. When interest rates change, everything is affected. The Federal Reserve's prime rate impacts consumers and businesses' ability to access credit. When the Fed changes interest rates, it creates a ripple effect that is felt immediately from large commercial banks down to small local ones. Large entities, like corporations, can borrow money from large banks at the most favorable interest rate, called the prime rate. Local banks start with the prime rate as a starting point to build their interest rates for mortgages and other loans. The higher the prime rate, the greater mortgage interest rates become. In an attempt to cool off an overheated economy, the Federal Reserve hiked the prime rate in March, July, and September of 2022 by a total of 2.25 percentage points. These moves were the most aggressive used by the Fed since the 1980s. When 2022 began, the average mortgage rate was about 3.2%. By late September it had reached about 6.4%. That's a bitter pill for prospective homeowners to swallow. Now, let's walk out of the Federal Reserve and into your local bank. Before you get there, let's discuss what you need to know about mortgages. First, let's make sure we're all on the same page by stating clearly what a mortgage is. A mortgage is a loan, that is a binding legal contract. It specifies a repayment schedule. The term of a mortgage can be 10, 15, 20, 25, or 30 years. In the United States, the most common version is a monthly, flat-rate loan for a term of 30 years. At the beginning, the monthly payments mostly pay off the interest. As time passes, an increasing amount of each payment goes toward the principal. In addition to the repayment of principal and interest, property taxes, and insurance must be included to determine the total monthly housing cost. This is commonly referred to as PITI. The bank looks at the PITI figure to assess one's ability to afford the mortgage. 2 rules of thumb to consider. First, monthly mortgage payments should not exceed 28% of total monthly income. Second, all debts, including housing expenses, should not exceed 36% of total gross monthly income. Let's illustrate this using $10,000 as total gross monthly income. Since all debts should not exceed 36%, or $3,600. And, since principal, interest, taxes and insurance are 28% or $2,800. That would leave $800 to cover all other debts. Fortunately, you can find most anything online. But, to make it convenient, 4 links are included below that will make research easier. Please know that we are not being paid by any source to promote these links. They are there solely because they will be of value to you. Based on income, debt and available cash, the first link will estimate the price range you should be focusing on. The second will give you an estimate of how well you can afford a specific area. The third one provides mortgage rate estimates by zip code. Lastly, the fourth link shows current monthly taxes and insurance on specific properties. This will also give you an idea of what those numbers might be for similar homes in your area of interest. With this information, you will be able to closely estimate your anticipated monthly carrying costs. I said we would be done in about 5 minutes, and we did it. You know more about mortgages than you did 5 minutes ago. See the link below to read a more detailed article. If you enjoyed this video, please hit the like button, and subscribe to Explaining Difficult Stuff. Every time someone subscribes, it makes our day. We appreciate it. It gives us the incentive to keep reaching out to people of all ages with our videos. Thanks for watching Explaining Difficult Stuff. By the way, there is no cure for curiosity.